Hey, how's it going, guys? I hope you're doing fantastic in this Friday night. And today I have decided to do a new live stream after about 9 or 10 months without doing it. So I've decided to do it because there has been a bunch of different things happening on the market these past couple of weeks and months. And also, I wanted to take a look at a global view of the stock market, but not only that, about different companies as well. So we're going to dive deep down into what is the current state of the Canadian economy in this live stream, and then we'll make some quick fundamental analysis and some full stock analysis on different companies to see what are different news and what have happened to these companies for the past couple of months. So I'm just gonna wait to see if everything works perfectly well, and we'll begin. So just give me a little second. I want to make sure that the live is working. All right, I think everything is working pretty well. So yeah, all right. So first of all, what is pretty important to understand that right now I'm also gonna make sure that I have, I think over here I can see if the live, yeah, all right. So I'll be able to see it. If you have any questions throughout the live, make sure to write it down so I can see your different comments and I can also respond to them. So the first thing that I wanted to talk about is the fact that we've seen in the past 2 months, so in April, I believe, that the Bank of Canada has decided to keep its interest rates or the policy rate at the same levels. This type of information is quite important for everyone because usually the policy rate will be the thing that will direct how the economy will go, because as you might probably know, the Bank of Canada interest and main objective is to control inflation. So first and foremost, we have the BOC, so the Bank of Canada meeting that is coming up on the June 4th of 2025. So it's going to be interesting to see if after a few decrease of the policy rate and if we can see that the policy rate will remain at 2.75%, because we remember that the Bank of Canada decided to start lowering its policy rate back at the end of May of 2024, where it was around 5%. So it has been chopped pretty much in half since that time. And we can also see that in March and in April, so since March, the policy rate and so the interest rate has remained pretty much the same as it was. So to understand obviously what could happen concerning that, we need to take a look at what is the inflation data. So what is the CPI data in Canada? So basically, to see that, what we can take a look at is the number. So usually the Bank of Canada will tend to keep and try to maintain a 3 to 1% inflation rate, and it's basically what is the target that is aimed by the BOC to make sure that the cost of living doesn't increase too much. And the good news about it is the fact that we can see that despite a slight increase in February, and we can see a quite important decrease that occurred in between March and April. So right now in April, well, actually we are in May, but we haven't necessarily had the most recent data for May. But in April, we can see that the inflation was at 1.7%. So it could indicate potentially that the BOC could decide to keep potentially decreasing its interest rate over their next announcement, which will have a great and a big impact, notably on big Canadian companies that have a lot of debt. I think notably to companies like Bell, TELUS, Enbridge, or big companies, usually companies that will tend to give big dividends to their shareholders will tend to have a lot of debt. It's notably the case with Bell recently, where we've seen that they've been forced to cut their dividend by over 56%, as I mentioned in my previous and my latest video, because the company itself wasn't sustainable with its dividend. Because usually how the company works is that they basically are giving the dividends based on the net earnings that they have. So if at the end of the day, they don't have that much earnings because they have multiple expenses related to interest that are related to their big debt, well, obviously it will reduce the possibility of the company to pay big dividends. So obviously it has an impact on companies and on your own investments. If they decrease the interest rate, it will globally help companies that have a lot of dividend, but at the same time, it can comes, I would say, like counterbalance this great potential reward on your savings interest rate. If, for example, you are invest into some high interest savings account, for example, personally, I am invest into cash ETF. So you can see right now, if we take a look at it for the cash ETF, I just want to make sure that everything is working pretty well. If we take a look at cash, we can see that right now the annual distribution yield is about 2.52%. But if we go back a few years ago, so let's say 1 year ago, we're going to have it right over here. So we see the annualized performance back, if we have like in 2024, for example, the calendar year performance, or the performance for the year in 2024 was of about 4.47. And 2023, when the interest rate was quite high, so we see that the interest rate and so the total return of this fund has been of 5%. But right now we see that if this interest rate or this policy rate would be decreasing over the next couple of months, this potentially could significantly decrease the annual distribution yield that you would be earning in your high yield savings account. So that will be the kind of it, but globally it will be great also for people like me that have mortgage on different properties, because on my side, for example, I currently have a remaining, I believe, mortgage of slightly less than $200,000 with a variable rate. So if the rate and if the policy rate decrease, it will mean that the interest rate that I'll be paying on my mortgage basically will be decreasing as well. Let me just check something. All right, everything is working well. So if we take now a look at what are the expectations when it comes to the next meeting, so at the beginning of June, so in 2 weeks, for the rate cut or the potential rate remaining, I guess, for June. When we take a look at the specialists, it seems to say that it is going to make it much more challenging backdrop for the Bank of Canada to continue cutting rate, at least in the near term. Because also what is important to understand is that they need not only to take a look at what is the current data, so the inflation right now is at 1.7% as we just seen, but also at what could be the projections. And right now, the big thing that is going on right now is about the Trump tariffs that could be coming up on multiple companies and on different countries, which will obviously massively hurt the economy of all of these countries. So if we take a look at that, we see to 1.7% the inflation that was 2.3% in March, so it has been dropping. But you see here, they seems to say that the inflation numbers were unfortunately stronger than what most people believed. And so here we don't, the central held this policy rates. We can see right now that where we don't necessarily have signs, they seems not to talk about what are their predictions, or I can't find it. You see, all right, here we have it. So they are saying right here that inflation has gone the wrong way and that it is an issue for the monetary policymakers. As I told you, the Bank of Canada's objective is to maintain some inflation between 1 to 3%. He said if they want to maintain their credibility, they should be keeping rates steady. So it means that they will not decrease their interest rate, and that's what he's expecting on its side. So here we have, okay, well, we don't have that much information about that one. I thought there was more. But globally, what could be, that's the next subject. But globally, what could be interesting to see, it will be to see if the policy rate decrease. I personally believe that the interest rate, well, if the policy rate decrease and the interest rate decrease, potentially the stock market in Canada could re-increase over the next couple of months and could continue to increase. Because if we take a look at the TSX market right now, S&P TSX. I'm not super organized right now. I'm not used to do live stream, but I'll get used to it eventually. But if we take a look at it right now, we can see that the Canadian market has only been up by about 4% year to date, while on its side, I believe that the American market has been down. But if we take a look at over the past year, well, actually, the Canadian, that's interesting. I thought that the Canadian market was underperforming, but over the past 5 years, we can clearly see that the Canadian market has been underperforming the American market. But recently, what is the advantage of the Canadian market as a whole is basically that it is invested mainly into more defensive stocks. So it means that they will tend to be less volatile than big American tech companies that are some of the most important companies into the American market. And it is why we've seen companies such as Tesla, Meta, Amazon, etc. being quite a lot volatile lately. If we take a look at Tesla, for example, we can see that over the past month, it has gained over 35% of value. But you can see that year to date, it is still down about 10%. So these types of companies will tend to fluctuate quite a lot over time. And it can obviously be some great investments in the long term, but they remain quite risky for people that are notably investing for the short term. While companies in Canada will tend to usually be more stable, but on the upper end, they might not gain as much value in the long term, even if they are still distributing some great dividends. But I don't want to talk about companies now. I want to talk also about the real estate market, which will be pretty interesting. But first of all, I want to make sure I don't have any. All right, I don't have any questions. So when we talk about the real estate market in Canada, obviously most people are saying that it's becoming more and more unaffordable for especially younger people and the younger generation. And the good news for us and for people that are looking to buy their house is the fact that home prices are potentially heading into a correction territory, where we've seen that some markets are seeing the most buyer-friendly conditions in decades, despite some lower policy rate and some lower interest rate compared to what we've seen 1.5 years ago. So if we take a look at it, we can see that it is said that the country's most expensive markets will potentially see a home price correction over the next couple of months, where we've seen that for the 5th consecutive month in April, the Canada Composite MLS Home Price Index fell of 1.2% from March and 3.6% from the year before. So it means it was justified, you see, by the chief economist of Royal Bank of Canada as being a softening supply-demand conditions that have triggered a price correction that could persist. Here we have the graph that explain it. So we've seen that the home price have been skyrocketing truly during the pandemic, so in 2020 up to pretty much the mids of 2022, where it has slowly started to correct, and now we are more stable in terms of the growth that it is taking. But you see that here we have some description. For example, Ontario is taking the brunt of it, where every market posting month-over-month declines. Toronto's home price index has fallen 6.2% over the past 5 months, but other markets are taking bigger hits. So it's pretty interesting to see, because obviously real estate is known as being a way to invest and being safe, and people often think that real estate will just increase in the short term. In the long term, it is pretty much the case, but in the short term, real estate sometimes can fluctuate in value, and we can have sometimes some correction. Obviously, it can be linked potentially to the supply and the demand, because if we take a look, basically at the supply and demand chart. So here we have it. So we have here the quantities. Here we have the price of things. Here we have the demand. And here we have the supply. And we have the average price here. So it's our price number 1. Basically, what can happen is that right now we are in a market where we are massively lacking, and we are in a in a housing shortage. So basically what happened is that our supply is diminished. So we see that the supply has been diminishing compared to also the demand. So the demand is increasing on its side. So we see that the demand is increasing. So it basically makes that so I'm just going to do the little draw here. It makes that our price number 2, which is our current price right now, is way higher compared to here. We could say that it is the affordability. It's quite hard to write with. I'll just write afford, and it's the current price here. Here we have the current. It's hard to write with a mouse, but here we have it. So that's the problem of the real estate market in Canada, is that we have not enough construction that are being built every year compared to how many people are coming in the country. So compared to the immigration, if we take a look at housing shortage in Canada, you see that we are facing a significant housing shortage, requiring an estimated 3.5 million more housing units to restore affordability. I think it was before 2030. Yeah, here we have it. So an additional 3.1 million additional homes by 2030. So compared to the current production, which is about, I believe, 250,000 new homes that are being built in the country per year, it would be pretty much an increase of over 250% of the current production pace. So it's pretty much impossible. And we see that a big reason for it, obviously, is also the fact that Canada population has been growing rapidly, increasing by over 1 million people in 2023. And now it has been slightly diminishing because of multiple problems. And I think that there has been some not credits, but some like foreign students that don't have the visa, that I think it's harder now for foreign students to come study in different places in Canada. So obviously it might have a certain impact on the immigration and on the cost of real estate, but still we see that the rising housing cost is basically based on the housing, on the supply and the demand of the real estate market here. After, we have a certain lag here. So what I wanted to talk also about is the rent price, because obviously if houses cost more, rent will increase. But in the case, as we've just mentioned, that we could see a certain correction, a slight correction, not a big correction, but in the housing price over the next couple of months, it has also has a certain impact on the rent price, notably in the big markets such as Toronto, which has given tenants more negotiating power. Here we can see that the average one-bedroom rent in downtown Toronto currently worth about $2,224 per month, which is a quite important diminution compared to what it used to be, which we can see that it cost about $400 less than the last rent peak in October 2023. So it's quite an important diminution. But what is important to understand is the fact that those markets are still quite unaffordable, because if we take the average household income in Canada, which is about $106,000 for a family, or if you prefer, we could take that the average employment income for individual would be, if we take it like the median in household income after taxes, we're going to take this one, because usually people will be two, especially in big markets, to live. So it's going to be quite rare for one people to live, for example, in one, it can happen in one bedroom apartment. But let's say, take the example that we are only having one people. So let's take the example that we have $73,000 net. I think it's after taxes. So $73,000 we divided by 2, which would be our average income after tax for Canadians. So $36,500. And in the case of the real estate rent, the rent in Toronto of $2,224 per month. So we're going to multiply this by 12 months to see what would be the rental income that we would be paying. So we'd be paying about $26,688 in rent. So if we divide this by $36,500, which is our annual income, it will represent over 73% of the average after-tax income of Canadians, which is quite a lot, especially when you need to also pay groceries, if you have to pay other things such as clothes, school, etc., food, transportation, etc. So it is why a lot of people now are not able to save a lot of money. If we take a look at what is the Canadian saving rate, you see that the average Canadian was of 6.1% in the fourth quarter of 2024, which was down 7.3%. So the saving rate of Canadian is only about 6%, which is pretty much nothing, all right? But right now, I just want to share with you, that's about the average. Yeah, here we have it, the average annual income of Canadians. So I guess that this is pretty much, I must assume that this is some average annual income net, because we've talked that it was around $36,000 the average. But so we see that the income will obviously quite dramatically increase around 34 to 44 years old. But what is important to understand, here we have the cost of rent. But what I wanted to share with you is a compound interest. Here I have it. So just before, I'm going to take a little sip of water. All right. So if we take a look at what is over here on the impact of compound effect, the impact of the compound effect on your investments if you start right now. Let's take the idea that we are starting with $1,000 invest right now. We're gonna put it on, like, let's say 30 years. We're gonna put it with the average return of the market, which would be, let's say, 10% on a monthly basis. And we're gonna say that per month we're gonna be able to save, if we take 6%, we're going to put it at 10% because the average Canadian is able to save 6%. But in our case, we're going to say that we'll be able to save 10% of our salary. So $36,000, let's say that we divide it by 12 per month and we take 10%, so $300. So we can see that if we start right now investing in 30 years, we would be able to have over close to $700,000, which is pretty good, because if we use the 4% rule, which is pretty useful when you want to know how much can you withdraw at your retirement. So you take your $700,000 and you multiply it by 4%, you could be able to generate about $28,000 per dividend or per income from your investments in 30 years. If you just invest $300 per month on 30 years with a 10% average annual return, this would be pretty interesting, because with $30,000, when you add this with also other different income that you could be generating, for example, if you have a pension plan or other different retirement plans, it can be pretty great to have this type of income at your retirement. So per month, it would make about $2,333 per month from your investment. So it is important to start investing as much as you can as soon as possible as well. It is what I am preaching on this channel, and it is what I'll continue to preach for the next couple of years. So let's say that we are someone that is really working hard to increase our investments and we want to invest even more. Let's say that we can invest, let's say, $1,000 per month. Let's take a look at what will be our total balance when we're going to be changing that. So $1,000, you see that we jump from $700,000 to over $2.2 million. And if we take that and now we multiply it by 4%, we see that we would be able to generate over $91,000 per year, or basically $7,600 per month from our investments in 30 years. But obviously, I understand that $1,000 per month in investments is not necessarily easy for most people. But it is interesting to see what is the impact of the compound effect, because it can rapidly increase, and I am already seeing it, the impact of that on my own portfolio, since I've started to invest like over, I believe, 6-7 years ago. I think I've started like before the pandemic to invest, and I've started also to save money once I've started to work. So it was around 12 years old, and then I have maxed out my TFSA at 18 years old, and since then it has helped me notably to buy my first property, my first triplex. So it can be a great way to find different ways to save more money, to be able to invest it more, especially when we know that our average income is taxed extremely high in Canada. So here I've taken the example that we're going to be taxed in Quebec. Let's say that the average income is about $60,000. So we're going to be paying some taxes of close to $16,000 on this $60,000 that we've been able to earn. And so basically this represents an average tax rate of 26.37%, with a marginal tax rate of 36.12%. And the marginal tax rate basically is the tax rate that will be applied on the last dollar that you are earning, because here in Canada we have a progressive tax system. So it means that every time that you are earning more dollars, basically you'll be potentially more taxed on a certain bracket. So it goes by bracket. So from one bracket to another, you'll be taxed a certain percentage on the province, but also at the federal level. Obviously, here I've took the example of Quebec, which is one of the most taxed countries, one of the most taxed province in Canada. But if I take the example of Alberta, you can see that I've been. Wait, let me take. So we go from about $16,000 of taxes paid to about $13,000 or $14,000 if we put it up. So it's about 22.84% of average tax rate, and a marginal tax rate of 30%. So quite less compared to citizens of Quebec just like me. So I think it was pretty much all what I wanted to talk about. The importance, obviously, of making sure to invest as much as possible, as I always mention in my videos. I've also talked about the real estate market, which is expect to move a lot over the next couple of months. It's expect to potentially be a fierce market. I've also talked about the potential increase or the potential, decrease or the keeping the same rate of the Bank of Canada over the next couple of months. I've talked about the rent as well. I think it's pretty much it for the global economic overview. Obviously, the other big news has been the multiple Trump tariffs threats that have been made lately. Recently, we've seen that today, I think it was, he threats on Apple, Samsung, and the Europe as a trade war intensifies. So I think he threatened Apple with 25% tariffs on non-US made iPhones. So right now, obviously, what is going to be the impact of that is that it is creating a massive uncertainty on all the global economy, but also on the different markets. It is why we've notably seen that in March, the market has been tanking at the end of March or at the beginning of April. It has been tanking before that Trump decided that he wanted to give like a 90 days pause for the potential tariffs. But obviously, nobody necessarily knows what will be happening with those tariffs, but if they are to put in place, it will have a disastrous impact on every economies that will be impacted by it, which is pretty much all the important countries across the globe. And here in Canada, we won't be safe from those. So it's going to be interesting also to see how those tariffs will impact the next decision of the Bank of Canada, because right now we don't necessarily know what will happen, because one day he's saying that he wants to put new tariffs and the other is saying that maybe it's not the best decisions and he's talking about other things. So we're going to see what will happen with that. So yeah, today it was the threats of imposing new tariffs on Apple for non-US made iPhones. So he wants to prioritize its economy. So he wants to make sure that people are building stuff in the US, which I think is a good idea, but I don't think that tariffs themselves are a good idea, because I think that they will also punish the American people by having, because if the US are putting tariffs, it means also that other countries that are being tariffed will decide to put tariffs on the US as well. So it won't benefit anyone in that case. So that's pretty much it for the global economic outlook. I would now take a look at the different companies that I personally have right now in my portfolio before to end the live. So let's take a look right now here at a few companies. I'm just gonna take another sip of water. All right, so I want to do it briefly, and if we want to make other lives eventually, I can also make other lives over the next couple of months and weeks. It's just that I've been having a lot of different things happening in my life right now. I've been running. I had a race the past weekend. I've also helped my girlfriend to move out to a new city for work. So I've had a lot of different things that have been happening in my life. But right now, if we take a look at a few companies on my portfolio, I'm just going to close a few of these things right here. Let's keep this open. Oui, j'ai du pétrole canadien à Scratch. J'ai Enbridge, Pembina. Here I have it. So I have some oil here, Enbridge and Pembina. I have about 300 shares at the moment of Enbridge, so about $13,000, well, close to $14,000 in Enbridge. So about 12% of my assets invest in Bridge, which I'm currently up about 37% on the average price that I've paid for it, and about 100 shares of Pembina with the current price of $51, so about $2,700 in Pembina, which is up about 89%. If we do the calculus, basically, I'm going to take the yield of Enbridge just to show with you how much money I can generate from it. So we see about 6%. Let's take a look. If I have 6% of Enbridge, of dividend on Enbridge per year, it would mean that with a current position of, we're going to multiply it by, actually, like that. It would make over $823 per year of dividends that I've been earning from Enbridge only. Donc, j'ai quand même assez de... J'ai assez de... Comment je te dirais ça? J'ai assez de compagnies pétrolières présentement. Ça représente à peu près, globalement, si je prends, mettons, Enbridge and Pembina, 15%. So 15.31% of my assets. So it's quite a lot. I want to maybe decrease a little bit my position. Eventually, what I want to do is just to buy another property. Ce que je veux faire, c'est vraiment d'acheter une nouvelle propriété parce que présentement, moi, j'ai un triplex. Là, j'ai des compagnies un petit peu, mais moi, éventuellement, mon but, ce serait de réinvestir une certaine partie des profits que j'ai faits pour acheter une autre propriété, refinancer aussi. Mais là, c'est ça, tu vois, en ce moment, my portfolio is currently worth, you see, at the moment, about $157,000. So it's with some about some upside potential of over $48,000, which is pretty great, honestly. I have other companies, you see, I have other big GAFAM. I like the tech companies I have, notably companies like Meta, Google, which are up over 100% on it. And thing. Non, c'est le premier live que je fais. Je fais généralement là, c'est parce que je fais plus des vidéos normalement, mais là j'ai décidé de faire différent un peu. Puis là, c'est ça vraiment présentement. Je fais plus. Là, je fais un test là, un peu, là, voir si tout fonctionne. Voir comment ça fonctionne des lives puis tout là. Mais là, c'est ça, j'ai parlé un petit peu tout à l'heure de l'économie un peu. Puis là, je parle un petit peu des compagnies. Je fais des analyses de portefeuille, des analyses plus de compagnies, des analyses de fonds, différentes choses comme ça aussi. Puis c'est ça, globalement, ça ressemble pas mal à ça. Là, tu vois, j'ai parlé un petit peu du marché immobilier, j'ai parlé un petit peu de la situation avec les tarifs. Puis c'est ça. Fait que si c'est des compagnies que tu veux que je regarde rapidement, mettons, je sais pas si c'est des compagnies que toi tu investis dans ça. Je sais pas si c'est des compagnies dans quoi tu investis que tu veux que je regarde ou quoi de même. Moi, mon portefeuille, ça ressemble pas mal à ça. So I'm translating, but I'm basically saying that I'll try to do more lives in the near future. Right now, those lives I want to be able to continue to share a global overview of what is the state of the economy, not only the Canadian economy, but the overall economy as a whole, but also to make some different stock analysis on multiple companies. And I love doing, for example, analysis on Canadian companies because myself, you see that I have over, I believe it's like 9 Canadian companies plus one Canadian ETF as well. So I only invest into the Canadian market. In total, if we take the asset ponderation, you see that into the Canadian companies, I'm invest over 45% of my assets. While obviously, well, actually, you can see that in terms of the American market, if I take also the VFV, I'm only about 40% invest into the American. Well, I can take also SCGD, but about 40% of my assets are invested into the US market. So I also want to have a certain ponderation eventually into the international market. I want to be able to invest into other different types of international companies such as Nestle, or I will potentially most likely invest with international ETFs. But right now I'll invest into Canadian dividend companies and also American tech companies, as you can see here. Ah, ben parfait, mais full commodité, ça c'est-tu. T'as-tu des exemples? Es-tu plus dans des compagnies ou t'es plus dans des. Plus des compagnies ou plus. Comment on appelle ça? Dans des. Je sais pas si ça. Les vidéos, en tout cas, ça. Attends un peu, ça c'est ok. T'es-tu plus dans des compagnies ou dans des fonds en ce moment? Mais merci du subs en passant. Puis, ben c'est ça, moi, je vais peut-être prendre l'habitude d'en faire plus souvent des lives. Des fois, quand ça m'arrive, peut-être pas tout le temps les vendredis soirs, là, mais je vais trouver des moments que ça va être facile pour tout le monde, puis je trouve que ça se fait bien. Mais, en des compagnies, ok. Ben, c'est ça, c'est intéressant. Si jamais, des fois, tu as des compagnies que tu veux que je check, ou moi, j'ai des modèles, là. Je peux te le montrer, là. Pour analyser la valeur des compagnies, là, j'utilise des modèles, par exemple, ça, BCE. So here we have an evaluation model. I just want to give you a quick overview at different tools that I personally have to basically analyze the value of different companies. So here you can see that I use multiple valuation models. We have the period inch one, we have the dividend discount model, we have the discounted cash flow model, and we also have 2 grams original and grams revised value formula. So this type of spreadsheet is pretty useful when you want to analyze different companies. I can enter the data in it and see after it, what is the true intrinsic value. So you see here, it has been used for my last video that I've made on Bell, and we've been able to clearly see that with the different ratios and the metrics we have, that the company was overvalued in every single valuation model. So that's quite useful to do. OBE. Je connais pas OBE. C'est une Energy. Ah, c'est-tu une compagnie c'est-tu une compagnie pétrolière, ça? Calgary, ça doit être pétrolière, ça. Je pourrais l'analyser éventuellement, même faire une vidéo. Obsidian Energy. OK. 755 millions. $755 million of revenue. I'm doing a quick analysis from a... C'est ça, Obsidian? Le leverage. Je pourrais aller voir aussi leverage free cash flow. Mais je vais aller voir... je suis curieux de voir parce que je ne connais vraiment pas cette compagnie-là. Je vais aller voir leurs earnings. Ils ont sorti récemment. Ben, des fois, c'est... c'est-tu une compagnie... C'est-tu récent quand même? Parce que j'ai jamais entendu. C'est-tu une Canadienne? Ouais, ça, c'est Calgary, ça doit être un Canadien. Must be Canadian company. If we take a look at the market cap, it has been slightly diminishing. Oh, shit. Price to earnings ratio, alright. 6. God damn, it's pretty low. 6. And is it distributing a dividend as well? $13,000. Increase, ok. Quand même. 13,000 shares. 13 million shares. C'est Obsidian. Obeying. Has been actively buying the company's insider alert on X reported that purchased shares of on February 26, 25 at per share. 900 and an average price of $7.24. Just voir. I want to see 10% security holder of Xcode Technologies because I don't know him. Of Black Diamond as a 50. Profitable transactions, average return. Pretty good. Over 1 year. If I can't. That's quite interesting, though. I might do a video on it to do. I might do a video on this company. It looks interesting. I didn't know about it, OBE. I'm gonna put it on my watch list. Add holding to my watch list so I can not that my watch list. So eventually I can on this one. All right. I can do a video on it because I've also been watching another company recently. I know it must be potentially an hype, but c'est la compagnie d'Olivier Primo. Moi, je regarde ça récemment. Je vais peut-être faire une analyse sur cette compagnie-là aussi. Je sais pas si tu es investi dedans, toi qui aimes ça, les utilities puis tout, mais ben, je pense que c'est ça, les utilities, c'est que tu disais que tu investissais le prix de l'action en 2005. B stock 2005. Oh. God damn, yeah. $200. C'est comme un. It's like. It makes me think. I don't know. Maybe it's gonna turn around, but it makes me think to Nortel stock because like Nortel, or is it Nortel? There was like a company back in. I'm pretty young. I'm 26. I'm 26 years old, but there was a company back in the early 2000s that was super super big and that just plunged just like that. I don't remember what it was, but we can see, I guess, that over the past 5 years, you can see that the stock is quite massively up. So I guess that there is interesting things that are happening with it. So faudrait que je regarde un petit peu à ça parce que ça a l'air intéressant quand même. Compagnie, pour vrai, je connaissais même pas. Puis tu me parles de ça. Tu vois, sur 5 ans, ça fait plus 1000% de rendement. Chris, I think it's outperforming maybe not the Bitcoin, but the past 5 years. It's actually I think it's actually beating the performance of the Bitcoin over the past 5 years. It's crazy. What? So, I mean, I guess that the company must have had big news recently. And if the other, is he like a venture capital investor or I'm not able to see. Director, Black Diamond. Climbing company. Black Diamond. I guess it's an investing group. Owns a portfolio of business that solve. Yeah, so but usually when big investors like that buy a company, it must mean that they have some inside info and they might know things about the company, so it has interesting potential. Look out at the shell. High cost producer, look out at the shale oil in the Permian Basin. Shale oil. I've already heard about this basin somewhere. I think was it in Bridge or something, but account for significant US shale oil. OBE, but basically OBE stock, Obsidian Energy, are they like a transportation company just like in Bridge, or are they like taking out we are pleased? I'm gonna take a look at it. Corporate update, corporate transact presentation. Okay, so of operate Pembina assets, all right, through 300 disposition of operate Pembina. So they bought some $320 million of Pembina assets, because I'm invested in Pembina, and sometimes I don't even follow that much the company, but sold our operate Pembina assets for proceeds. Okay, so $200 million in cash. World Corp shares, $15 million in value in plays. Metrics value. I want to see, like, do they have like projects? All right, here we have production. So here we see that they have seen a certain increase. 2024, I guess it's for the same quarter. If we take a look at the growth between 2023 and 2024, it's like %16. Net operating costs have been diminishing between these 2 years. Have been slightly increasing here. FCS, the free cash flow, negative. But is the company paying dividends? That's what sometimes is also, it's also interesting to see. I guess they are not maybe paying dividends because they are not worth that much, but yeah, they are not. But the performance has been quite incredible, I must say. Over, I'll try to do a video on it. Par curiosité, t'as fait combien de rendement jusqu'à date sur cette compagnie-là depuis que tu l'as acheté? Je suis quand même assez curieux là, parce que c'est quand même. Je pense que je vais peut-être faire une petite vidéo dessus éventuellement. Ça a l'air intéressant aussi. Mais on a beaucoup de compagnies à énergie intéressantes au Canada. Puis c'est sûr que moi, je vois plus souvent, j'ai moins de petites compagnies à part VN. Je sais pas si tu connais là, VNP plutôt. 5N+, là, mais sinon, à part ça, j'ai pas grand petite compagnie. C'est plus des 5N+, VNP. I don't have a small company. Usually, the smallest companies I have maybe are Savaria, 5N+. Savaria is also pretty interesting. Has been on a slight diminution lately, but still, the company is producing essential products for the future. Some wheelchair and stair lift for elder people. So it's going to be interesting, and it's paying a monthly dividends of close to 3%. That's a company that I continue to hold, and sometimes when I have some money left, I'm buying more shares of it. I don't have a lot of it invest right now in that company. I think it's, I only have like $5,000, $5,700 invest. But yeah, I'll definitely take a look, and I'll definitely make a video about it over the next couple of weeks. So I'll just close this. Là, je l'ai ajouté à mes favoris, là, fait que je vais pouvoir regarder. C'est Prime. I think I'm gonna talk about Prime another day because it's already been, I think it's been like almost 1 hour. Car je suis down, car j'ai commencé dans le haut de la saisonnalité. CG, c'est un... Ok, c'est ça, c'est une autre compagnie, ok. Ok, tabarnak, ok. 11%. CG, Cardinal Energy. Sont-ils reliés, ces deux compagnies-là, ensemble? CG, 11%, mais c'est-tu... T'as peu. Ah, il y a un payout ratio quand même qui est raisonnable. 11% of dividend with a 102% payout ratio is quite good, to be honest. It's a company, I guess, that is using a lot of their retained earnings, but still, to being able to pay close to 12% of dividends, pretty interesting, to be honest. And I want to see the performance CG stock. Say year to date, it has been slightly down. Also down 1 year. Oh, but for the past 5 years as well, it has been another one, and it's worth only $1 billion. Because you see, usually the popular Canadian companies in the energy field usually are Suncor. That's Suncor Energy, which is also down year to date. We have Enbridge, which I am highly invested into because I like the fact that they also have some renewable energy infrastructure, but also the fact that they are paying quite a big dividend, a 6% dividend, and they are continuously investing to grow their operations worldwide and in the US. So it's pretty interesting. And there is Suncor, there is Fortis as well. Fortis. Mais je vais définitivement regarder ça. Je vais les mettre sur mon... Celui-là, si je pourrais la mettre... comme je l'ai dit, je connais pas vraiment ces compagnies-là. Mais c'est intéressant par contre parce que pour vrai, je vais aller les regarder puis je vais checker ça là. C'est ça, j'ai fait une couple de vidéos. Si ça t'intéresse, tu peux les regarder là, sur des compagnies. Si utilities, the utilities field interests you, I have made a bunch of different videos on companies like Pembina, Suncor, and Bridge. But I have yet not talked about like smaller energy companies in Canada. So it's going to be a great time to potentially make one on this one and take a deeper look at what are the financials. Like usually it's important also to take a look at how the company is trying to expand. Like what is the company investing in, their capex, in which are they trying to expand, for example, their production and their transportation of energy by making, sometimes it's by making acquisitions or other things. But yeah, if I can judge only by the increase in valuation it has gained, will be over the past 5 years, which has returned more than the Bitcoin, I have to say that it has been able to perform quite well. Yeah. Oh, ça c'est, yeah, that's for sure. That's for sure, and that's the beauty of the true beauty of I would say penny stocks and companies that are smaller is the fact that even if they are more risky, they have more volatility, they have also more potential, more massive potential of gains. And that's something, honestly, I don't think that anyone should invest in these types of companies, because most people are scared to lose money. Because for some people, if you lose 50% of your investment in 1 year, most people will panic. But at the same time, if you're willing to research on these types of companies and find that there is potential in them, well, obviously the sky is the limit in this case. Because if we take the fact that it's only worth like $478 million, and let's say that it will be worth like, what in Enbridge, I think it's worth maybe like $60 billion. No, it's worth $136. Let's say that it's only worth like one tenth of the value of Enbridge. So let's say that it's worth like, just to make it simple, we're gonna put it at $4 billion. It would means that it would 10x the value of your investment if you are currently investing in that company. So if you're putting $1,000 in it, it would be worth $10,000 if it would eventually worth $5 billion. I mean, so obviously it has a high potential of reward. It comes obviously with some high potential of downtrend of cons as well. But if you're willing to put a little bit of your money in these types of companies, it can have great potential return. Just like Bitcoin back in the days, Bitcoin and crypto right now won't be the thing that will 10x. I don't personally believe that Bitcoin will 10x over the next 5 to 10 years. I don't think that it will increase that much, because let's just go back 5 years ago. It was worth maybe like, I would say like $5,000 per Bitcoin. Now it's worth like over $150,000 Canadian dollars per Bitcoin. So it has gained a lot of value because of the popularity. But yeah, in the case of penny stocks, it's pretty much the same. It's not necessarily known by a lot of people, but I think it's a good idea to put a little bit of your money into it. I wouldn't put, if I were you, I would not put all my money into it. But if you put a little bit of it, it can be pretty interesting. As I mentioned, one of the companies I'm looking to potentially invest in right now would be Prime Drink Group Corporation. I might do a video on it eventually, because they are exploiting water. They are having some permit to exploit water in I think it's all across Canada. So might be interesting in the future if they are able to, because they are looking to have agreements with the government and find ways to exploit that more. So it's going to be interesting to see these types of companies, if they can benefit and if they can like thrive in the future. Non-money who have fundamental buying back stocks or paying it depends. I would say that paying dividends, like big dividends, can be interesting, especially for older people, like retirees, for example. I would never tell a retiree like go and look to invest in a penny stock. Like someone that is, let's say, 70 years old, that is just looking to receive consistent like amount of income every single month to pay their expenses. It might not be the best options, but I'm sure that you're probably young. So when you are young, it's time to take the risk. As for anything in life, if you take the risk right now to invest, for example, me, where I am looking to invest and I like to invest is in big ETFs, like for example VAV, or ETFs that are tracking growth companies as well. Eventually, I want to invest more in that. Right now, as I mentioned, I'm more invested into real estate. But how old are you? Because I think older people sometimes it would depend. I guess it depends on people, but I think that the younger you are, the more risk you can take. But once again, it always depends on your personality. So yeah, I'll put this one on my watch list. And that's pretty much, I think it's been like about 1 hour since I've started this live. Yeah, about 1 hour. Mais oui, pour répondre à la question, je pense que ça semble être en tout cas une compagnie intéressante. En tout cas, juste de voir les ratios ici, là, tu vois que 6. Quand tu regardes juste le price to earnings ratio, c'est sûr que même price to sales, price to book ratio, less than 1. It's pretty good, to be honest. And what is the forward P ratio? It's slightly higher, but it means that they are forecasting some potential growth in their earnings, great growth. I want to see what the analysts are projecting for this company. Okay, well, they don't have OBE stock opinion. I feel that there's more risk to buy for sure. Nvidia. Well, I agree with you that, for example, companies like that would be like the thing is that if you buy big blue chip companies, for example, Nvidia right now, Nvidia wouldn't be like a company in which I would invest because, as you mentioned, it's been a company that has been quite like it has been skyrocketing. Usually, one thing that I'm watching for also is if the company has seen a massive increase in its valuation over the past month, a couple of months, it might means that obviously it's in a good trend, but like not like it won't necessarily increase as much in the future. Like a company like Nvidia has been massively increasing. Now it's worth over $3.20 trillion. So obviously it has less potential of increasing compared to like increasing as much for your in terms of your investments compared to, for example, investing into OBE. OBE, it's worth $400 million. The total S&P 500 market, I think it's like $50 trillion. So only Nvidia by itself, 3.20 divided by, let's say, 49 is worth about 7% of the total market. So obviously, I don't think that a company like Nvidia will reach like, let's say, if like $30 trillion over the next 10 to 20 years. It would be pretty surprising for me if it would 10x over the next 10 years compared to a company like OBE. If it is truly financially strong, it has great potential, I believe. But I need to do an analysis before to see it. Yeah, that's for sure. Well, I mean, don't trade for the short term, but there is still the day trader. But I'm not a day trader. I'm not trying to time the market and stuff. Usually, my approach with the market is really I'm more like I would say safe guy, but yeah, man, I will do it. I will do it in the near future. I'll do a stock analysis on it. But yeah, I mainly invest into great ETFs right now. Great American market ETFs and great Canadian market ETFs, but also in different individual companies. So I'm gonna do a video on it in the near future, and it's gonna be pretty much the end of the stream. Gotta buy NBR right now. I don't know this one too. You're giving me great idea, at least of companies that I don't necessarily know. But that's the reality of the market, the stock market. It's that it is a game of popularity. The companies that will gain the more, I would say, that will gain the more value will be the ones that will be the most popular as well. Because a company like sometimes there were, I don't know if you remember, but there was like the GameStop and the AMC saga back like in 3 years ago, I think. These companies had no value technically, but they still gain massive amount of money because of their popularity. So obviously, if these companies are able to have great like you told me that OBE, I think like one investor has invested and bought like 3 million shares of it. If these types of events happen, obviously it will help them to gain more values in the near future. So yeah, man, I'm gonna try to do some stock analysis on these companies as soon as I can, and I might do it also. I might eventually do more live streams in the near future. Just let me know, guys, when is the best time for you to for me to make more live streams, because it's already been 1 hour, and yeah, it's a cash flow cow. Yeah, I can take a quick glance to it. $400 million once again. Total revenue 2.9. So on their side, they're able to grow their revenue. They've also been able to. I'm looking at NBR. In terms financially, operating income has been also massively increasing. So I guess that they've been able to lower their the costs is here. Yeah, their cost of revenue hasn't been increasing as much as our total revenue. So here, if we take a look at the EBIT, the EBITDA, yeah. So yeah, the company looks to be growing quite well on their side financially. The balance sheet quickly. So we see their assets has been diminishing, but if we look at, I want to see their total debt, $2.5 billion. Their debt has been diminishing. Current assets. The equity on its side, 1.2 million. So the equity has been staying. They've been able to diminish their total debt, which is good. Stockholders' equity. Yeah, I could also do an analysis on this one, but yeah, when's the earnings call? NBR. Is it now? Labor Industries earnings. April, this, okay. Well, I'll take a look at it. I guess that first quarter results. So it was on the 29th April. So I guess it would be like in 2 months. But yeah, I'll check it out. I'll check at it. Yeah, that's good. When a company reinvests in their business model, it's just like, I know that it's bigger, but a company like Cambridge, it is one of the reasons why I like it. It's the fact that they are also continuing to invest and reinvesting their money into the company, even if they are big. So that's a great way to grow. Obviously, you're not going to be able to grow because if you're able, I believe personally that if a company is able financially to grow, they will be for sure in the future able to grow their value. And that's something that small companies, sometimes they need to have a few big investors investing in them and a few big news, and sometimes it can rapidly increase. We've seen it with Palantir with Palantir over the past couple of years, but yeah. Mais oui, c'est des bonnes compagnies. Je vais continuer à faire des live streams. Still those share, man. Je vais continuer à faire des live streams éventuellement. Peut-être je pourrais faire des analyses même en direct, quoi de même. Puis là, c'est juste que là, ça fait 1h15, là, mais c'est ça, là, genre, je vais regarder aussi peut-être pour faire une vidéo sur la première compagnie que tu m'as dit, là, OBE. Puis voir ça, là, mais Si t'as des chums aussi qui ça les intéresse, les finances, tout ça, tu peux leur dire de venir sur les lives, puis on va se faire des live streams avec ça intéressant là. Fait que ça va être pas mal ça pour asseoir, là, mais. So it's gonna be pretty much it for tonight, guys. I hope that you like that. Make sure that make sure that you let me know it in the comment section. What did you thought about this type of live stream? I would eventually make more of these types of live streams if people are interested into it. It's been over 9 months since I haven't made anything. But yeah, I hope that everyone liked it, and I'll be making some new videos pretty soon. So have a good night, guys. Peace.